Trump's 2017 Tax Cuts and Jobs Act is way different than the leftist media is telling you. As a practicing CPA, I want to educate you on here's what changed in 2017, and here's why you may want to support the renewal of the Tax Cuts and Jobs Act. Before the TCJA, we had 7 tax brackets: 10, 15, 25, 28, 33, 35, and 39.6. After the Tax Cuts and Jobs Act, the tax rates dropped to 10, 12, 22, 24, 32, 35, and 37. So if you take a look at the graphic here, before the Tax Cuts and Jobs Act and after, you can quickly see that not only did all tax brackets drop, but also the brackets for people in the middle, they widened up. So more of your income, if you're in business or if you're self-employed, more of your income is taxed at the lower rates. I guess if you're in business, maybe the naysayers are calling you the rich. The standard deduction before the Tax Cuts and Jobs Act was $6,350 for single individuals and $12,700 for couples. After the Tax Cuts and Jobs Act, it nearly doubled at $12,000 for singles and $24,000 for couples. That is the layer of income, part of the layer of income that you pay 0% on. Do you think the wealthy and the rich give a rip about that? It's not just the rich, it's lower for all. Now also, the Tax Cuts and Jobs Act, it definitely favored families. And here's just a little illustration why. The child tax credit, it jumped from $1,000 per kid to $2,000 per kid. When we say tax credit, it's money the government just gives you because you have kids. So that means more money in the pockets of the families, the people that need it. And if you want to talk about small business and freelancers, well, the Tax Cuts and Jobs Act, it added something that never existed in tax law before. It's just crazy. It's called the Qualified Business Income Deduction, and it allows you to deduct 20% in many cases of your business income. Do you think the rich care about this? I gotta say, this is a big win for self-employed people and business owners and families. Now, there was a trade-off. There definitely was a trade-off. If you itemize, you were always able to deduct your state and county taxes. After the Tax Cuts and Jobs Act, it is capped at $10,000. Now, that's currently being debated. But who did that affect? Anyone West Coast or East Coast, because those are high tax states. And as a result, when you pay tax to your state, you can no longer deduct all of it on your federal tax filing. So if you're one of those naysayers that you believe this tax law only benefited the rich, show me the money. Where is it benefiting the rich? Yes, the very, very top tax bracket is shrank a couple percent, as all tax brackets did. If that's what you're upset about, somebody in America being successful, I am happy for anybody that is successful in America. I want you to be successful too. Drop your thoughts and comments below. And for more tax and business news you can use, follow me.